Let's get to Shopify. It is up over 170% year to date, and we've got a viewer wondering more about the stock's long-term trajectory.
Hi, I'm Frank from New York. I'm calling in about the stock Shopify. I really like this stock. I love its business model. I love the fact that it caters to e-merchants of all sizes. My question is, I entered the stock at $1,050. Does this stock have more room to run? Should I add to my position, or should I hold and maybe wait for a pullback? Thank you very much.
Dan, what do you tell Frank in New York?
Well, Frank, it's obviously a very thoughtful sort of thing. You're new to the name. The stock has had this massive, massive run. It's got a $130 billion market cap. It's trading very near its all-time highs. I think from a secular shift standpoint, we just talked about as it relates to Amazon and some of the competition they have coming. They are powering that for a lot of much smaller retailers. So to me, I think this is clearly a story that you want to stay long. You made a decision to buy some here. What I would say is, wait a little bit, because you want to average into something like this rather than just kind of paying the tippy tops. You already started paying near the highs. Let's see what happens. You know, it is a stock market mania, and this one is clearly participating or is one of the leaders, but really it depends on your time horizon. If you have a long-term time horizon, I would say wait to add to your existing shares.
Let's do a little timeout here for a trade school, Karen. When we say average into a name, what does that mean?
So averaging it means you buy some, let's say he bought some, let's say today, he bought it before, but you buy some today. Then you wait, let's say a week or a month, whether you choose however time frame you want, and you put the same amount of money into work. That would be dollar cost averaging. So if he owns 1,000 shares now, he would use that same amount of money a month from now and buy that much dollar worth of stock wherever the price is. So that's averaging in. That's called dollar averaging, where you just spend the same amount of money over various periods of time, and that gives you an average price over time, because it's really hard to pick the bottom in any name. I've never been able to do it, so very often I just average in. I buy some over time.
Yeah. Thank you for the chime. I like that. Bono, and what do you say about Shopify?
I think it's still in an uptrend, but it's starting to test the lower bounds thereof. So, I would wait to see if it holds that 50-day moving average. I think it's kind of hovered around there. But yeah, if you own it, I don't think you need to, rush out and sell it. Maybe you put in a stop. But in terms of adding a sizable position, I think, as the other two panelists have alluded to, you need to be a bit more conscious and cognizant of the price that you're paying over the long term.
All right. Well, Jim's got the green light to reopen in New York City today, and our next viewer is looking at a play on a potential fitness boom.
What's going on, CNBC Fast Money team? It's Adam. I am calling you from the great state of North Carolina, where finally the gyms are open. That being said, is now the time to invest into Lululemon. Thanks for your time.
Bonwin, what do you tell him?
Is now the time? No, I want to answer your question very specifically. I think this stock bottomed around 150, then shot from 150 to 300, consolidated, then ran again straight up from 300 to 400. And I realize the price target has been raised to about 445, but just from a risk-reward standpoint, I think you've probably got about 10% of upside, and maybe you've got about 15-20% of downside. So I'd wait for a pullback here. The stock is just run too far, too fast.
I think inherent in this question, Karen, is this notion that gyms reopening could be the catalyst for Lulu, when I would argue, and we've talked about this many times, how the need to wear proper pants at home is really diminished during a pandemic. And you're much more likely to go for yoga pants.
Yeah, diminished down to zero. If the camera goes from here up, I think that has been the driver of this name by a lot. So to the extent that names that were, at first this one wasn't seen as a beneficiary of the pandemic, but then it sort of evolved to, wow, those online sales, which they were well positioned for, were gigantic. And the stock, as Bonwin pointed to, it just has gone parabolic. I mean, it trades like they're working on a vaccine, actually. That's how crazy the valuation for this name has become. So I love the name. I had a nice run in it. I sold most of it, a little over 300. I'm very sad about that, but you know, that happens. I would not buy more right here. I would not start a position right here.
Dan?
A little fun fact about our friend Bonawyn. You know, Bonawyn and I used to sit on a trading desk next to each other about 9 years ago, and he used to go and do a little boxing or kickboxing or whatever the heck he was doing before the market would open. He'd come in and he'd lay out his sweaty gym clothes on one of those Herman Miller chairs right behind us. It was a total mess. It wasn't Lulu, I will tell you that. I think you were like just Nike toe-to-toe or head-to-toe there. But that was really one of my first impressions of Bonawyn. Now we're just social distancing a little bit here. I mean, listen, you know, this stock broke out at 325. It's been, you know, straight line to 400. I would look, this is a great company. They're doing a lot of great things. I would look for an opportunity again to buy this thing near that breakout level near 325.